Hi, and thanks for your time today. My name's James. I work with Giraffe, and I'm here. The purpose of this 10-minute video is to give you an understanding of three things. One, what is Giraffe? Two, why is it beneficial to you? As a property developer, you probably see a lot of demos. Why is this tool going to be any different? How can it help you? And then thirdly, the last question I want to answer is how can we work together? So let's start at the top, and we'll sort of answer these three as we go uh, across the different feature sets. What is Giraffe? Well, Giraffe has set about to tackle a really big problem, which is feasibility. And feasibility can mean different things to different people, but really, Giraffe's whole reason for existing is to integrate the entire feasibility workflow. So feasibility starts at site selection and even really market selection. Is the market even feasible? And that's primarily a spatial and research problem, through to design and financial feasibility, where the way you construct cash flows can even make or break a deal. That whole process of thinking through where should I invest through to how do I make this specific deal work is what we call integrated feasibility. And that's what Giraffe is trying to solve. So functionally, what that means is there's three or four primary food groups for Giraffe that help you assemble tool sets to think through each of those problems. And whether you're one person who is wanting to do an integrated workflow or a firm doing an integrated workflow, Giraffe is here for you. Giraffe is here to help stitch those pieces together. So if we think through that top level problem of, okay, where should I invest my dollars? And is a market feasible or not feasible? You really need a set of spatial tools. So over here on the left, I've got all the tools that I'll need in order to do that. I've got parcel data, which for the US is really well organized. We partnered with a company called ReGrid. Just this alone would save you an enormous amount of time and money. I talk to a lot of developers who are talking to their consultants, sending them PDFs, sending them screenshots from Google Earth that are really then cause a whole lot of chaos downstream because they're not starting with the right information. They're just sharing a brokerage packet, and that's kicking the can down the field and costing everybody a lot of money. So let's have a quick look at the parcel data. This is incredible data. Every parcel in the US mapped along with its size, its owner details, its tax information, and its zoning information. So I'm down in here in downtown Austin. You can see I've selected this parcel. If I open up the detail, I've got everything here, the exact zoning ordinance, what that means, all of the overlays. I can go read about that by just clicking the code and going and reading the depth of the code. The owner's name, the tax info, the parcel value, all the way down to the census information, the demographic. I won't show all of it, but really very extensive. And we can use this for prospecting. If we're searching for sites, we can even filter now on that size, where we may say, hey, let's filter by, look for sites that are greater than 2 acres. When I hit return there, it's going to filter out most of downtown Austin. You can see there's some sites that are big, but I can also filter on zoning, whether it's an overlay or a specific zoning control. I can say, hey, I want to search for any zoning downtown that contains the word mixed. You can see there's a couple of mixed use parcels that are over 2 acres, and there they are, right? So that's if you're using it for prospecting. But if we may still be at the level of market selection, in which case I need to have more tools available to me. For instance, comparables. I need to understand what rents are in this region. So we partnered with HelloData, and that will help you find, okay, well, if I'm going to build, roughly 200 units at 4 levels, I want to look in this area and see what the comparable rents are, then that's possible too. That's just a spatial tool that's helping us decide whether the rent in this area will meet our requirements or not. So going a layer deeper on spatial feasibility, there's all sorts of data layers at the local level that you'll need to think about, not just environmental constraints, but political constraints or infrastructure constraints. And you need to be able to go and connect all of those and look at them in order to rule a site in or out. So if we go up the MOPAC here and we look at some of the federal-owned land on the MOPAC, as I'm turning layers on and off, I'm understanding feasibility at a different level. Let's have a look at, is a site even worth looking at from a environmental point of view, often, particularly in Austin, you'll get these really slopey sites, not worth looking at, etc. Right? So all sorts of different spatial layers coming together here. When I do find a site that I like, and thinking through the lens of an integrated developer, I might just tag it. So let's turn on the parcels here. Let's say, one of these sites on the Mopac, this one here I like. I'm just going to tag it, give it a name, go through and say, yeah, I'm going to put, walk-up product on here. The status at the moment is just going to be a prospect that I'm interested in, and I'm going to save it. Right? So now, if I save this project and share it out with one of my consultants or someone in my team who wants to think spatially with design, or even myself, I'm leaving a note here for myself to come back to it, I'm ready to go. I'm already saving the team an enormous amount of time by sharing all the context detail, the project boundary exactly as the county has it set, and the kind of product that I want to put on it, which we said, walk up. So let's change modes now. Let's think in terms of spatially. Let's think about how we might plan and design this site that we've just allocated. That's a huge site because it's got this road on it. So if I turn on this, on the environmental layers, I might think through, okay, well, there's this knoll up here. So what if we were to put some housing on this knoll? And particularly back here, that might be the area I'm going to look at. So the very first thing I'm going to do is just draw roughly what's that area. So just under 2 acres right there. I'm going to just draw a parcel. Okay, so the first thing I might think about is the developable area is here, and then maybe over here. What is that in terms of area? I'm just going to highlight these regions. Again, if I'm the development manager, I might be doing this. But the process to do this right now, you're probably in Google Earth trying to think and draw polygons, screenshot them, try and figure out a scale, or maybe you're just punting this straight off to your civil engineer, I'm not sure. But coming up with this number, I know, is tricky. And then as we're working here, you can see the wetlands is loading in. We've got this wetlands creep that we need to consider through here. That's going to give us even more issues. So let's pull this back. A lot of developers I speak to are paying people for this level of detail. So let's just pull back. Okay, so if we just sum up those, 1 acre there, a bit over 1 acre there, and just under 2 acres there. We've got a bit of slope here, which we can handle, but we want to keep this as low cost as possible. So 1.5 acres there. So we're really at sort of 3.5 acres, which I could do some back of a napkin math on density and be happy. But if I really want to drive the nail in and get to a solution myself, before I've spent $1, before I've spent more than 10 minutes on this site, I might just draw something. So I'm going to think through sort of like a low density garden type product on this site. I'm going to take my apartments tool and I'm going to just draw a couple of strips of dwellings. I want this to be 3 levels because, like I said, we're going for low density, cheap to build. And let's just sort of lay some out here and see what we can do. We've got to make sure we have enough room for, like I say, I could be a designer here, or I could be a development manager, depending on who, how excited I am feeling. Think about the access way here, how competent I feel in drawing. But we're all operating within a common environment here, and that is very powerful. So as I'm drawing, you'll notice on the right-hand side, I'm getting all the data out, I'm getting a unit count out, and I'm getting a real geometric thinking through of the site. So let's go here. Maybe that building facade's too long. Maybe we'll do something like this. Okay, that's starting to look cool. And then let's park. I'm going to grab my perpendicular parking tool and just kind of go a bit willy-nilly here. So you can see, as I'm thinking through, I'm keeping my eye on all these metrics here, which are helping me understand whether this is feasible or not from a design point of view. Okay. So we're very close. We haven't even done any visitor parking yet, any amenity. We could maybe get an amenity block down here. We're 240 units. I like the way this feels, right? So I've done spatial feasibility. Now I'm doing development feasibility. And the last thing I might do is, design feasibility. The last thing I might do is start to think through financial feasibility. So let's go ahead and open up our analytics. I'm going to use a very standard template that looks at hard costs, incomes, solves for an NOI, and then backward solves for a residual land value. So costs, really, we're looking at yield on cost. That's the metric we're going to look at here really quickly. So let's open up our hard costs. Again, Giraffe doesn't do in the data scrape to tell you what you should build at. That's not what we do. We're a big calculator on a map. So let's take your inputs, and you may say to me, okay, well, in Austin, we're building 3-story garden apartments at $380 a square foot, which is, I don't know if that's good or bad, but let's say it's aggressive. And I'm just changing the unit rates here. The parking we are going to consider at like $50 a square foot because it's all on grade, and we'll save. And then the road, I think the road we might think about linearly instead of from an area point of view. I just want to make sure it's not pulling into this calculation. Yep, zeroed out. That's great. So let's save that. Okay, so that's starting to look slightly better, where we've got a $60 million build cost, but we've got an enormous amount of soft costs, which is way too high. So we're going to capture everything else in hard costs, but I just want it to be a flat 20% of my project. So I'm going to get rid of the custom soft costs. 20% of my project. That's way too low. Why is that way too low? Because I'm looking at the gross area. So let's go get the previous metric we asked for, which was hard costs, and multiply that by 20%. Perfect. Contingency is about 10% of the whole. Land purchase price at the moment is just let's put a placeholder in here of, say, 8 million. Okay, so we're at 100 million all in. Let's think about rents. Now, we had our rent tool help us, and I could go pull that in again and actually run comps off of this project in this area. For the sake of time, I won't do that. But you can see here, if I tell it to, it'll go and pull the characteristics of this unit against, of this plan, and help us use that to go and find comps in the area. But I'll leave that for now. But let's go quickly back to our pro forma, and we can see we're quite low on or quite high on our yield. So let's just address that very quickly. I'm going to open up the 1-bedroom units and have a look at what we're solving to. So we are in Austin. Let's be slightly more cavalier with our rents. We'll say 1 bedroom's fetching $2,100. The 2-bedroom is fetching $2,500, and the 3-bedroom units are selecting us getting over 3. So let's say $3,200. And I want to change my mix because I don't want any studios. So let's just select everything and make sure we don't have any studios. Yep, let's get rid of that. Maybe a few more 3-bedders. Okay, that's good. Okay, so after adjusting those rents, let's scroll down and look at our feasibility. So our NOI is about 4.6 million, which is subbing out a 25% OPEX rate, which is very high. And on a 6.5% cap rate, that is really an unreasonably low number. So let's tweak our OPEX here, but I don't think even tweaking our OPEX is going to help us. We're not going to get within the spread at a 6.5 cap rate. So, until cap rates compress or until our design gets better, this is not a workable deal. And this is now where the magic of Giraffe comes in. So as a team, we can sit here and we can optimize this deal together until we find what's going to help us make this deal work. And maybe it's something more like this, where we actually need more density, and we can find that density if we spend a bit more time, and we pay our architects properly, and we get everyone invested in the piece. We may actually find that the deal works if we can sit here and optimize. But without that integrated approach, to optimize takes far too long and too much capital. So a site like this, we say, we can't do anything here until the deal pencils, right? We just can't get in there and solve it. So we have to wait till cap rates compress before we can move. But when things are integrated, The experts can come together and we can figure out what's going to drive that higher cost per square foot or yield per square foot and lower that cost per square foot. And that's what's going to unlock the deal. Once we've unlocked one deal, then we have the template for every other deal that we go and look at. And this is where you take a tactical opportunity of collaborating better and you turn it into a strategic edge. So let's say the problem that we identified here was something around our design or something, about the way we're approaching our horizontal costs. And I want to now templatize this for the whole organization to use, or for myself to repeat what we did last time. I'm going to just say, let's use that as a template. Say for the whole of the US, I want to take this standard approach for this particular product type. So let's zoom out and go back to the drawing board and have a look at everything that we've done. We've looked at a market spatially. We've found markets based on comps. We've zeroed in on specific sites and ruled out or ruled in based on real constraints like environmental. We've saved a site. We've shared it with a teammate. That teammate's come in and done a plan. That plan didn't pencil. So we had a meeting as a group to figure out what will make it pencil. And we've now gone back and we're saying, okay, we've figured out what's going to make it pencil. And we want to take this approach systematically to an entire market to see if we can find other sites that may work with that approach. And here I'm now looking at every site I've underwritten with that level of detail across the whole country, the whole globe, if I want to, if my portfolio is that expansive. And we can zoom in and drill in on the detail of any one of those projects. So there's always clarity and understanding and three-dimensional due diligence done on every single site. So let's do that one last time. Let's go look at a different site. I want to look at a project in Orlando, Florida. I don't know which one yet, but I'm going to pick one as I dive in. I know the team have been talking about Mills 50. Let's see if that project is in here somewhere. Here it is. Let's open that project up. Here's the pro forma. Here are my different scenarios that I've run. Here's the final value of the different scenarios. And I'm ready to rock. So much detail, so much good thinking. I can even see down to the level of what layers they were considering and why they chose that specific site. And that allows me to then zoom up and take a strategic view of the entire business at any time. So with Giraffe, you're moving from a disparate, siloed approach to an integrated approach that's going to give you a strategic edge as you go.